Good afternoon, everyone. Thank you for joining us for our NC Leap webinar on nonprofit formation. We are very lucky to have Shawn Garrett from the Costner Group here with us today. Shawn specializes in real estate and corporate law, and we are very grateful for his presentation. I ask that you all please mute yourselves and turn your videos off as we get started, and please leave your questions for the end or put them in the chat and I will moderate them to ask at the end. And with that, we will get started. Thank you, Shawn. I'll turn it over to you.
All right, thank you, Carson. Good afternoon, everyone. My name is Shawn Garrett. I'm an attorney with Costner Law Group, and today I will be speaking about nonprofit formations in the state of North Carolina. So let's dive in. Bear with me, I'm going to be running my own PowerPoint and going back and forth between screens. So if you see me looking to the right, I am looking at my PowerPoint. Okay, so what is a nonprofit corporation? A nonprofit corporation is a legal entity which has been incorporated under the laws of its jurisdiction for purposes other than making profits for its owners or shareholders. Nonprofit organizations always have a purpose, and that purpose is typically to serve the greater good for society. In a bit, we will talk about that purpose and what constitutes the greater good and purposes that a nonprofit can have. You may be surprised to find that to qualify for tax-exempt status, federal law dictates what purposes a nonprofit can or cannot have. In the definition that I just read above of a nonprofit, I indicated a few items that need to be discussed. We'll talk about what the terms entity, incorporated, jurisdiction, and profits mean. A for-profit corporation's sole responsibility is to its shareholders. Shareholders invest time and money into a company to receive higher returns on their investment. However, in contrast, a nonprofit corporation's sole responsibility is to its purpose. You're going to hear me say the term purpose quite a bit today because that's ultimately the crux of what nonprofits' motivating factors are. Let's look at these definitions. An entity is a legal organization that exists by itself. Many common entities that most people are familiar with are limited liability companies or LLCs and corporations. So being incorporated is for an entity to be formed into a legal organization. For this to be accomplished, an incorporator or person responsible for forming the entity must draft and file the appropriate documents to alert the Secretary of State of the entity's existence. This is done traditionally with documents known as the Articles of Organization for LLCs or Articles of Incorporation for corporations. Once the Secretary of State has reviewed and approved these documents, the entity will be incorporated for purposes of state required filings. For nonprofits, there are a few more steps to take, as nonprofits are governed by two sets of laws, state law and federal IRS law. We'll discuss this more in a bit. The term jurisdiction refers to the governmental agency with the power to make legal decisions and judgments in relation to the rules, regulations, and laws concerning the entity's existence. Being that this presentation is being done for the benefit of the North Carolina Lawyers Entrepreneurs Assistance Program, the jurisdiction that we will focus on today is North Carolina. And I expect that most people tuning in today are located in the state and have intentions of forming nonprofits in the state of North Carolina. Lastly, the term profits refer to a financial gain, especially the difference between the amount earned and the amount spent in buying, operating, or producing something. The figure you get when you subtract expenses from income is the profits of a company. Every entity, whether a for-profit or nonprofit entity, must make profits. Profits are not bad. If an entity never made money, they would cease to exist. However, what an entity does with those profits determines whether an entity is for-profit or nonprofit. For-profit entities share their profits amongst their members, shareholders, or owners of the company. Nonprofit entities must use all of their profit to further their purpose. There's that word again. All right. Steps to formation. There are 4 essential steps to form a nonprofit corporation. You must first determine the organization's purpose. The next step is to actually form the North Carolina Nonprofit Corporation with the North Carolina Secretary of State. Next, you must apply for exemptions from income taxes from the IRS using Form 1023, We'll look at that in a little bit. And then you must apply for exemptions from real property taxes, if applicable, in your jurisdiction, your county, sales and use taxes, and register as a charitable fundraiser with the North Carolina Department of Revenue. So there's a few different steps there. The key is there to not assume that these are automatic. Once you file as a nonprofit corporation with the Secretary of State, there's a few more steps that need to be done, and we'll explore those in a minute. All right. As I said, nonprofits are governed by both state and federal law. Per federal law, to be tax exempt under Section 501c3 of the Internal Revenue Code, an organization must be organized and operated exclusively for one of the exempt purposes as set forth in Section 501c3 of the Federal Internal Revenue Code. And none of its earnings may inure or benefit any private shareholder or individual. Some of the entities that, some of the purposes or reasons for tax exemption under 501c3 are religious, educational, charitable, scientific, literary organizations, organizations that foster testing for public safety, organizations whose purpose is to foster national or international amateur sports competition, or prevention of cruelty to children or animals organizations. In regard to state law, NCGS North Carolina General Statute, Chapter 55, governs and defines nonprofits. It defines it as follows. A corporation intended to have no income or intended to have income, none of which is distributable to its members, directors, or officers. What's key there is the word corporation. I was going to go a little bit into the differences between LLCs and corporations. Some jurisdictions allow nonprofits to be formed as limited liability companies, but it's much easier to form a nonprofit under federal law if it's a corporation. And North Carolina General Statute, Chapter 55, requires in its very definition that it be a corporation. So in North Carolina, nonprofits are formed as corporations. We look to federal law for taxation, regulation, and compliance. We look to state law for formation of the entity, operation, and governance. Let's take a look at some advantages and disadvantages to 501c3 status. The 501c3 status offers a myriad of benefits to the designated organizations and the people that they serve. For example, 501c3 organizations are exempt from paying federal income and unemployment taxes, and patrons who donate to them are allowed to claim a tax deduction for their contributions. To help with funding and to further their mission, these organizations are eligible to receive government and private grants. To qualify, the organization must have a need for and a mission aligned to the purpose of the grant. So it's very important that if, as a nonprofit, you hire grant writers, you have them looking for grants that align with your mission so that you have higher chances of qualifying for them. You've heard me mention the term purpose and mission. As I said, we're going to get to it. I've probably said it 100 times by now, but there is a slide on it, so we'll get there in a second. In addition, 501c3 organizations often receive discounts from retailers, free advertising by way of public service announcements, and food and supplies from other nonprofit organizations decide to help in times of need. Lastly, the 501c3 is the only nonprofit where donations are tax deductible for the donors. This is a very ideal way for organizations to raise capital and funds. However, the organization's purpose must fall under one of the purposes allowed under Section 501c3, the IRS code, as we've discussed. Simply wanting to offer tax-deductible donations as a perk of your nonprofit is not enough of a reason to the IRS to allow the tax-exempt status. Now for one of the disadvantages. Once formed, a 501c3 could be the lifelong dream of its founder. However, once established as a 501c3, it no longer belongs to its founder. Rather, it is a mission-oriented organization belonging to the public. To maintain its favorable tax treatment, it must operate within the confines of the law pertaining to 501c3 organizations. This is important to keep in mind. For-profit companies can do good. That's another thing to keep in mind. Many for-profit companies do good. Starting a nonprofit must be about the cause, without profits or recognition. There are two types of nonprofits. They are known as a public charity and a private foundation. Both are classified as 501c3 organizations under IRS law, but they're treated a little bit differently in the way that they, they're treated a little bit differently in the way that they operate. Now, some of the differences between the two: public charities must receive a significant portion of their funding from public sources or donations. The other type of nonprofit, the private foundation, these entities generally are started by very wealthy individuals or families. They receive a majority of their funding from one source. Private foundations can be operating, where they actually perform services to the public, or non-operating, where they fund other nonprofits. Think of a private operating foundation as a foundation that directly offers services to the public with their own programs and agendas. The private not operating foundation is more of an angel fund that furthers the efforts of other nonprofits. On my slide, I have included a few different examples of some public charities. So a public charity, University of Illinois Foundation, they receive a significant portion of their funding from public sources or donations. It's my alma mater, so I included them, Go Illini. Private foundations, a few of those are the Ford Foundation, Getty Foundation, W.K. Kellogg Foundation, Bill and Melinda Gates Foundations. You see the name of a lot of the families or individuals who started them in the name of the foundation. And then you have a member-driven organization. These organizations do not benefit the public, only their members. In contrast to the University of Illinois Foundation, the University of Illinois Alumni Foundation only caters to the members that laid out in their bylaws can be members. Going on. All right, now to purpose. I'm now going to get into the bleeding heart of this presentation to discuss purpose. Purpose is defined as the reason for which something is done. Purpose, people have been searching for purpose, discussing the greater good and what's best for society for generations. The nonprofit entity was created to allow for a legal entity to foster such purpose and to protect the individuals wanting to foster change from legal liability, financial liability, and to encourage credibility. You're much more inclined to offer money to the Girl Scouts of America than the strange girl with a random box of cookies outside of CVS. At least I think, I'm not sure. Purpose defines the nonprofit entity and whether or not the entity qualifies for tax exemption under 501c3. Now, let's talk about profits. A nonprofit can make money utilizing activities done by its volunteers. By activities carried on primarily for the benefits of members, students, patients, or employees, sales of merchandise that was donated to the nonprofit, the rental of mailing lists of donors, and the distribution of insubstantial items or incentives for donating money. Think of if a donation was made, the nonprofit would then send out stamps or something like that to the donor as a small thank you. When nonprofits make money, they can pay their overhead, reasonable compensation to those offering services to the organization. However, the profits must be used to further the purpose of the nonprofit organization. These profits cannot be distributed to owners. There are no shareholders in a nonprofit, but it can't be used to benefit any of the people who helped start it. Profits can be used for whatever furthers the purpose of the organization. Yeah, I did make a slide on LLC versus corporation. Okay, just to touch on this, a nonprofit organization is at its core a company with state filing requirements and annual reporting requirements to both governmental entities that have jurisdiction over the entity. These are the IRS and the local government agency. In North Carolina, nonprofits are required to file reports annually with the IRS and the North Carolina Secretary of State. For IRS annual reporting purposes, this may be a little bit in the weeds, but I did want to include it so that as you are working with an attorney or forming your nonprofit yourself, you at least have this information. So for IRS annual reporting purposes, if the gross receipts of the exempt organization total $50,000 or less, a form known as 990-N is used. If the gross receipts are between $50,000 and $200,000, total assets are under $500,000, it uses a form 990-EZ. If the organization's receipts are $200,000 or more and total assets are $500,000 or more, form 990 is used. What's most important here is failure to file 3 years in a row result in the organization losing their exemption. If this happens, the exempt organization must start from scratch and apply for a nonprofit exemption using Form 1023 with the IRS, which we're going to look at in a little bit. The North Carolina annual report, filed annually, of course, must include the nonprofit organization's name, address, and email address, as well as the names, addresses, and titles of its principal officers and a brief description of its activities. Failure to file these annual reports will result in penalties to the nonprofit. As I've said, it is a legal organization that is tax exempt under federal and state law. Under federal law, the nonprofit starts by being formed as either, in North Carolina, we're making this specific, as a corporation. The IRS prefers that nonprofits are formed as corporations, and additionally, North Carolina requires this. How's a nonprofit formed? A nonprofit is formed in North Carolina by filing the Articles of Incorporation in compliance with the North Carolina Nonprofit Corporation Act. A nonprofit corporation is controlled by its members and managed by a board of directors, elected and acting under authority of the Articles of Incorporation and bylaws of the nonprofit corporation. Members of a nonprofit corporation are not, as such, personally liable for the acts, debts, liabilities, or obligations of the corporation. Subject to qualification and compliance with the applicable provisions of the IRS code, nonprofit corporations generally pay no income tax. Nonprofit corporations are unaffected by the death or withdrawal of a member. We will talk about termination and dissolution in a little bit. It's very important to include those provisions in the company's bylaws. Nonprofit corporations are dissolved by compliance with the nonprofit, in compliance with the Nonprofit Corporation Act, either voluntarily, administratively, or judicially. All right. Now, finally, the reason that everyone's here, how are nonprofit companies actually formed? The first step is to come up with a name. Coming up with a name can be a little daunting at times. You do want to make sure that the name focuses on the purpose as outlined in the formation documents. Nonprofit business names do not require a corporate ending in North Carolina, which is very important. LLCs typically have to end in LLC or limited liability company. This is not the same for nonprofit corporations. Ensure that the name is not currently in use with the North Carolina Secretary of State website. It's also very, very important because if your name's already in use, North Carolina Secretary of State's not going to let you reuse the name. Recommended but not required. Also do a Google search of the name and sleep on it. This is going to be the name that your entity is known as going forward. You want to ensure that your name is individual to your organization. If you started a company called Red Cross North Carolina, I'm sure that name's taken, but it may get confused with the other nonprofit entity. And since they're much bigger, you may get lost in a Google search if people are trying to find you. You want to ensure that the name does not have an unscrupulous association or meaning. It's also super important. And you want to see that social media page or website address has been taken. This typically goes with marketing. If you are starting your company, your nonprofit corporation, you may not have marketing funds initially, but you do want to ensure that email addresses or social media pages have not been taken by people who are not associated with the entity, and that people can easily find you if you were to claim those names later on. Step 2, select your registered agent. The registered agent is the person responsible for receiving important legal documents on behalf of the entity. This is the nonprofit's main point of contact within the state. This can be an individual or another entity. Very important here, when I said this is the nonprofit's main point of contact within the state, the registered agent and the nonprofit both need addresses within the state of North Carolina. So that's very important to remember. Step 3 is to select the company's board of directors. The nonprofit corporation is run by the board of directors and its officers. The board of directors handles corporate management, oversight of the organization, and the board also selects and hires officers for the company. Step 4, must draft and abide by the company's governing documents. This includes the company's mission, bylaws, and the conflict of interest policy. Drafting these documents at the onset are going to make organization, structure, and overall execution of the purpose much more streamlined and focused. So I highly recommend that you do not overlook these documents and you put them on paper and save them so that if anyone reaches out for them, especially the IRS, when it comes to applications or annual filings, these documents may be requested. Step 5, file the appropriate organization documents within the state. We've talked about that a little bit. That's the Articles of Incorporation here in North Carolina with the Secretary of State. Step 6 is to obtain a tax ID number, sometimes also known as an EIN. And then step 7 is to apply for 501c3 status, as we've discussed. Step 8, we're going to go into a little bit, but that is also applying for North Carolina exempt status. We'll get into that a bit as well. Neither 501c3 federal status or North Carolina state local tax exemption are automatic. So you will have to file those documents, those requests. All right. Now onto the Articles of Incorporation. I misspelled that, sorry about that. We're going to take a look at the organizing document that gets filed with the state and lays out key information about the entity. North Carolina has a specific article of incorporation for both for-profit and nonprofit corporations. On the next screen, we have the Articles of Incorporation for nonprofit corporations. At the very top, we see the law. I told you in North Carolina, all nonprofit formation and business is handled and addressed in North Carolina General Statute 55. So familiarizing yourself with that statute is very important, getting into nonprofit laws here in the state. This is the document that, of course, is submitted. We've got number 1, the name of the corporation. Number 2, it says here, check if applicable. The corporation is a charitable or religious corporation as defined in NCGS 55A 144. If you were to look that up, that statute points you towards 501c3 of the IRS code. So like I've said, these two laws work hand in hand. The North Carolina statute says the North Carolina entity is a charitable or religious corporation if it has been approved under the IRS code by the IRS. The name of the initial registered agent, that goes on there. That is the person that, of course, is going to be able to receive communications for the entity. The street address and county of the initial registered agent's office. As you can see here, North Carolina is hard-coded into this document. As I've said, these addresses must be within the state. The name and address of each incorporator. Whether the corporation will have members. North Carolina wants to know the structure of the entity, so it's important to provide that information to them as well. You'll also be laying that out in your bylaws. So like I've said, putting all of that information in paper form and having it handy will make filling this information out much more streamlined. North Carolina also requires that the corporation's dissolution or termination provisions be sent in. So it says attachment provisions regarding the distribution of the corporation's assets upon its dissolution. All right. At number 8, any other provisions which the corporation elects to include are attached. Page 2. We have the address and county of the principal office of the corporation. And then we have the officers optional that can be listed here, as well as a business address. All right. Down here, it does state that the filing fee is $60. And of course, it states the document must be filed with the Secretary of State. All right. Now, I want to talk a little bit about Form 1023. This is the document that is submitted to the IRS for tax exempt status. Only nonprofits can be tax exempt entities, and only public charities, which are 501c3 organizations, can solicit tax deductible donations. I mentioned that earlier. Exemption from federal, state, and local taxes are not automatic or guaranteed. Form 1003 is the application for recognition of federal tax exemption under Section 501c3 of the Internal Revenue Code. There's a version of the form called the 1023-EZ, wherein the charitable applicant scrutinizes themselves prior to applying to the IRS, making the IRS's review and their job easier. The Form 1023-EZ is filed electronically. The current processing time for Form 1023 is 3 to 6 months, and the wait time for Form 1023EZ is 2 to 4 weeks. So you would like to fill out Form 1023EZ if possible. It's much more appealing. There's a certification on Form 1023EZ that states that to be tax exempt under Section 501c3, an organization must not support or oppose candidates in political campaigns, attempt to influence legislation, ensure that earnings do not benefit private shareholders or individuals. They must not further non-exempt purposes per 501c3, must not be organized for the primary purpose of conducting a trade or business, or provide commercial type insurance as a substantial part of the organization's activities. So all of those certifications are items that the IRS wants to ensure the nonprofit will not be engaging in its purpose. The EASY form continues by asking questions such as, will you attempt to influence legislation? Will you pay compensation to any of your officers? Will you donate funds to or pay expenses for individuals? Or will you operate bingo or other gaming activities? I thought that one was interesting every time I see it. If you're able to attest to all of these questions in the negative, you may be a candidate to apply for 501c3 status using Form 1023EZ. However, I caution you, if you use this document and mess it up for any reason, by marking any answer incorrectly or leaving out a portion of the application that's being requested, the IRS will place the EZ form into the standard 1023 pile, and you'll have to wait the 3 to 6 month period before getting an update on whether or not you've been approved, or worse, that you need to provide additional information. So be careful when filling out that form. Take your time, consult legal counsel as necessary, and do it right the first time so that you do not have to wait. I'm going to touch on this information rather quickly, but when it comes to taxes, a lot of people do ask questions in terms of this 1023 form. It's a lot to consume and digest in an hour, but I'll get through it rather quickly. This is typically where most people have questions, like I said, and it relates to tax exemptions on the state level. I'm going to be quoting from the North Carolina Department of Revenue's guide for nonprofits. Being an attorney and not an accountant, I am not giving tax advice, and I can't. Getting with an accountant is the best course of action when it comes to this. So I'm just going to be reading a few things from the nonprofit guide. For nonprofit corporations organized under Chapter 55 of the North Carolina General Statute, there is no formal application or fee required to obtain a state franchise or income tax exemption. The process begins when the organization incorporates with the North Carolina Secretary of State. That's when it begins, but that's not the end point. After a nonprofit corporation is registered with the Secretary of State, the corporation can determine whether or not it should seek a letter of exemption from the department, and that'll be relying on the 501c3 of the IRS code. If the nonprofit's purpose falls within those listed exemptions, then the nonprofit would likely also apply for tax exemption under state law. A corporation that wishes to obtain a letter of exemption from taxes must provide a copy of its articles of incorporation, bylaws, and a federal determination letter, to the department. The department will evaluate the documents and issue a determination letter on the state level, advising the corporation of its tax status and any filing requirements. Sorry about that. Under North Carolina law, organizations that are exempt from federal income tax under the code are exempt from the corporate income tax imposed under North Carolina law on income. In addition, except as otherwise provided by North Carolina law, an organization that is qualified for exemption from federal income tax under the code is also exempt from the franchise taxes imposed under Article 3 of the North Carolina Revenue Law. The department does not issue exempt numbers. In comparison, the IRS typically does. For franchise and corporate income tax purposes, it does issue letters of exemption. The nonprofit corporation should use its federal identification number to file North Carolina franchise and corporate income tax returns. This is important. Except as provided by North Carolina tax law, a nonprofit corporation does not request a tax exempt letter from the department, is considered subject to franchise and corporate income tax. So like I said, it's not automatic. As I've been mentioning, nonprofits are governed by two sets of laws, the IRS and the state of North Carolina. They don't share records, they don't share filing systems. So any applications made to one, don't expect that the government entity that you applied to would automatically submit that request to the other government agency on your behalf. Give me 1 second here. Okay, I'll go through this a little bit quicker. Just a few more items that I thought were important from the nonprofit guide. Sales of taxable, tangible personal property, digital property, and services to nonprofit organizations and institutions are subject to state and applicable local and transit rates of sales or use tax. When such property is purchased for use or consumption. The North Carolina law does not exempt nonprofit organizations from payment of sales and use tax on items they purchase for use. However, provides for semi-annual refunds of sales and use tax paid by qualified organizations and institutions described therein on direct purchases or tangible personal property, digital property, or services for use in carrying out their nonprofit work. This refund is not to include sales tax remitted on taxable sales made by such organizations and institutions. Nonprofit entities registered for sales and use tax purposes may purchase tangible personal property for resale without paying tax to their suppliers, provided they have furnished the suppliers a properly executed Form E-595E, Streamlined Sales and Use Tax Agreement, Certificate of Exemption. The Streamlined Sales and Use Tax Agreement, Certificate of Exemption may not be used by a nonprofit entity in making purchases of items to be used or consumed by such entity. And then lastly, last little block of paragraph that we're going to go through in terms of tax on the state level. North Carolina general statute requires all property to be subject to ad valorem taxes. So this is real property taxes, unless specifically exempt or excluded from such taxation in the Machinery Act or in the based on local North Carolina law. Under North Carolina General Statute 105-282, every owner of property claiming exemption or exclusion from property taxes under the provisions granting such benefit has the burden of establishing that the property is entitled thereto. So they put the burden on the nonprofit to apply for those taxes and ensure that they fall under the exemption that they're applying to. All right, I'm going to move on to that, and we're going to talk about bylaws real quick. Okay. Now let's talk about bylaws. Nonprofit bylaws are a nonprofit's operating manual. Nonprofit bylaws, or the bylaws working with the articles of organization, are the main governing document of a nonprofit organization. They are the main official documents of an organization. The board creates bylaws when the organization is established. Bylaws are crucial because, for one, they're a legal requirement. They don't need to be filed, but every nonprofit needs to be able to produce them to show the structure, leadership, purpose, and rules of the organization. When drafting bylaws, ensure that your attorney includes a conflict of interest policy, voting procedures, provision for committees, provisions for dissolution or termination process, and provisions to change these bylaws. I'm going to touch on all 5 of these and kind of explain what they are and why they're important. Conflict of interest provisions are important to ensure that not only are the members and officers not benefiting from their actions on behalf of the nonprofit, but also to ensure that the actions done by the nonprofit do not contradict with the nonprofit's purpose. A good conflict of interest provision will protect the company and clearly lay out what actions are a violation under the organization's rules. Voting procedures will be readily welcomed when decisions are being made by the board. Voting procedures will lay out the number of votes for a motion to pass and what happens when there's a deadlock or disagreement between the voting members. Provisions for committees will allow the board to delegate certain duties to a subcommittee that can then execute the committee's purpose on behalf of the board. A good provision for committees will first and foremost exist. Not having it, it's not a good idea. So make sure that it exists. If this provision is left out of the organization's bylaws, board approval will be needed later on via voting procedures to allow for this option. Additionally, very well-written committee provisions will lay out the types of committees needed under the organization, their powers, authority, purpose, and goal. No organization starting out wants to think about closing up shop. However, addressing dissolution procedures early on will ensure that a process is followed and that the process is thought out with a level and clear head. A well-written dissolution provision will explain that what will happen to the organization's assets once the organization is dissolved or merged with another entity. Waiting until the organization is failing or when another nonprofit entity wants to merge with the organization or acquire them may be too late to think through the process with the same eyes as you had when you first set it up. Very important note, a nonprofit organization cannot be purchased or acquired by a for-profit entity. If a merger or acquisition is on the horizon, ensure the acquiring organization is also formed as a nonprofit entity. Lastly, good bylaws will include provisions to change them. Over time, the structure of an organization may change. The purpose should stay the same, unless you want to trigger a reapplication to the IRS. However, including language that allows for an organization to change, to adapt to changing times is important for smart and efficient processes. And that's all that I had. So this was a little short. I ran a little bit under an hour. So are there any questions? I think we're going to allow some time for that.
If you have any questions, oh, here we go. We have one in the chat from Fran Muse. Can you review the requirements for the annual report again?
Yes. Give me 1 second. Back over here. Give me 1 second and I'll get back to where they were. Okay, slide 10.
Just to quickly answer your question, Helen, this will be available on our website after today, and I will also be emailing the link out to all of you as well.
Okay, so sorry, I got thrown off on my slides. They're not numbers, but I will read the annual filing report requirements. The annual filing requirements for the state of North Carolina, they are going to want annual report, so a document that has the name, address, email address, names, addresses, and titles of its principal officers, the brief description of its activities, so that year over year they can ensure that the nonprofit corporation is staying true to what it is, the purpose is. And the North Carolina Secretary of State has a template document that you can use to fill out to submit. So.
Thank you. There's another question on 1023 Easies. Do you know the current turnaround time on the 1023 Easy?
You know, I tried looking it up. It looks like you say it's taken more than 2 to 4 weeks. That was the most recent number that I found. So I'm sorry I can't give you an answer beyond 2 to 4 weeks, but that's the number that I found when I was digging into the current turn times. So the IRS did not have a like a a widget that said what the turn time was on their website.
Thank you. Why does the IRS prefer that a nonprofit be a corporation?
I believe it has to do with the structure. The way that a nonprofit corporation is structured, well, let me go back. The way the LLCs and corporations are structured are a little bit different. Limited liability companies typically have members that do a lot of the managing, and members can be managers. Typically managers it's not flip-flopped. Managers are not members sometimes, but with a corporation, there's a very clear and defined structure, such as, there's a president that has general oversight and authority. And then from there, there's a board of directors. Typically limited liability companies do not have board of directors. So that's not to say under IRS law that you cannot have an LLC, but given the rules in North Carolina, we're required to have corporations.
Excellent. Another question. In addition to filing your annual report with your board of directors, it needs to be uploaded to the Secretary of State website. Is that correct?
Definitely. Yep. That document is filed electronically. So.
Awesome. one more question. I want to make sure that I understand nonprofits are not required to use INC, so Inc. after their name.
That's correct. Yep.
We welcome questions. So if you have any questions, please feel free to put them in the chat. We have, oh, here we go. Will the PowerPoint slides be submitted to us? So if it is okay with Shawn, I can share the slides, but the recording will be shared with you after this meeting.
Yeah, you know, Carson, I did not prepare it to be shared. I would like to put a few references in there. So if you give me about a week, I can probably put my references in there, and then I can get that over to you.
Great. Thank you so much. That would be a fantastic resource. And again, this recording will be on our website, and I will share it with everyone here after this meeting. Are there any more questions? All right, well, I think that is it for questions. But thank you so much, Shawn, for coming today. Oh,
Of course.
Wait, we do have one more question. Could you please go back to your cover slide? Oh, sorry, that's from us. Can you please go to our cover slide for a screenshot for our purposes?
Oh, the first one or the last one?
Yes, the first one.
Okay.
All right, well, I think that is it for questions. I want to thank you so much for being a part of our program today, Shawn, and thank you so much to all of our registrants for your awesome questions and your participation this afternoon. And with that, that is our presentation on nonprofit formation. Thank you so much.
Thanks, everyone. Take care. Have a great day.